Imagine a world where fortunes are built not on genius, not on speed, not even on sheer luck, but on something far more powerful: human nature itself. Every day, people make decisions driven by fear, greed, impatience, and overconfidence. They chase the highs, panic at the lows, and let emotions dictate their financial fate. But what if someone saw this chaos not as a risk, but as an opportunity? What if, instead of running with the crowd, they stood still, calm, calculating, and ready? This is the story of how irrational behavior, the very thing that ruins many, became the key to unimaginable wealth. It's a story of patience when others were restless, courage when fear took over, and wisdom in the face of market madness. It's proof that in a world of financial frenzy, those who master emotions don't just survive, they thrive. Welcome to the untold truth behind how human folly paved the way to greatness. The stock market is often seen as a numbers game, but at its core, it is driven by human emotions. Fear and greed, the two most powerful emotions in investing, shape market movements in ways that logic alone cannot explain. These emotions cause people to make impulsive decisions, react irrationally, and create opportunities for those who can remain calm and rational. Understanding this cycle of emotion and its impact on financial markets is one of the most valuable lessons an investor can learn. Greed is one of the most dominant forces in investing. When the market is rising, people become euphoric, convinced that the good times will never end. They buy aggressively, often at inflated prices, believing they are missing out on easy wealth. This euphoria drives asset prices beyond their intrinsic value, forming bubbles that are bound to burst. The dot-com boom of the late 1990s is a classic example. Investors, driven by the fear of missing out, poured money into technology stocks, pushing prices to unsustainable levels. Companies with no profits or even viable business models saw their valuations skyrocket simply because others were buying. This herd mentality, fueled by greed, created one of the biggest market bubbles in history. But greed is only one side of the equation. Fear is just as powerful and often more destructive. When markets decline, panic sets in. Investors, seeing their portfolios shrink, rush to sell, desperate to cut losses before things get worse. This panic selling drives prices down even further, often well below a company's actual worth. The financial crisis of 2008 is a perfect example. As the housing market collapsed and financial institutions crumbled, investors fled the stock market in terror. Many sold their holdings at rock-bottom prices, locking in massive losses. Yet those who remained calm and recognized the irrational fear around them saw an opportunity. Some of the greatest fortunes in history have been made by those who bought when others were too scared to act. The key to success in investing is not predicting market movements, but understanding the emotions that drive them. The cycle of fear and greed repeats itself over and over again. The key is to recognize these emotions in others without falling victim to them yourself. When others are greedy, prices are often too high, making it a dangerous time to buy. When others are fearful, stocks are likely undervalued, creating an opportunity for those willing to take a contrarian stance. This principle is simple in theory, but incredibly difficult in practice. It requires patience, discipline, and the ability to separate emotions from decision-making. Most investors fail because they let emotions dictate their actions. They buy high when optimism is at its peak and sell low when fear takes over. This cycle of emotional investing is why so many people struggle to build long-term wealth. The greatest investors understand it. The market is not just a reflection of economic fundamentals, but of human psychology. By staying rational when others are emotional, they can take advantage of mispriced assets and grow their wealth over time. Understanding how emotions drive markets is not just about making better investment decisions. It's about seeing opportunities where others see disaster. Fear and greed will always exist, and markets will always be unpredictable in the short term. But those who recognize these emotional patterns and remain calm in the face of chaos position themselves for long-term success. Patience is one of the rarest and most valuable traits in investing. In a world where people crave instant results, the ability to wait while others panic is what separates those who build lasting wealth from those who lose it all. The stock market rewards those who understand that real gains are made over years and decades, not days and weeks. But most investors struggle with this simple truth because they are constantly bombarded with noise. market fluctuations, news headlines, and the opinions of so-called experts urging them to act immediately. When stock prices surge, the temptation to jump in and ride the wave is overwhelming. Investors see others making quick profits and feel as though they are being left behind. This fear of missing out, FOMO, leads them to buy at inflated prices, often just before a market correction. Then when the inevitable downturn comes, they experience regret and fear, causing them to sell at a loss. This cycle of impatience is one of the biggest reasons why so many investors fail. They chase short-term gains without realizing that true wealth comes from holding on to great investments through both good times and bad. Market downturns test an investor's patience more than anything else. When stock prices fall sharply, fear takes over. News outlets amplify the panic warning of financial doom. Many investors, unable to tolerate the sight of their portfolios declining, make emotional decisions and sell at the worst possible moment. This impatience locks in losses that could have been avoided if they had simply held on. History has shown time and time again that markets recover. Life has a way of making us believe that things will always stay the same. We wake up each day, go through our routines, and assume tomorrow will unfold just like today. The world around us seems stable, predictable, and familiar. We make decisions based on what has worked in the past, trusting that the patterns we've come to know will continue uninterrupted. But beneath this illusion of stability, forces are always shifting, sometimes quietly, sometimes violently, reshaping the very foundation of our lives. History has shown us time and time again that just when people feel most secure, the ground beneath them gives way. Societies have risen and fallen, economies have boomed and crashed, and industries that once seemed untouchable have crumbled overnight. Yet despite these patterns, most people remain blind to the warning signs. They cling to comfort, convinced that their world will remain unchanged simply because it always has. They mistake temporary calm for permanent security, ignoring the reality that nothing stays the same forever. Consider the countless moments throughout history when everything shifted in an instant. The people who lived through these moments rarely saw them coming. The financial crashes that wiped out fortunes, the technological revolutions that rendered entire professions obsolete, the political upheavals that changed the course of nations, all of them arrived faster than anyone expected. Yet before they happened, life felt normal. Everything seemed fine. The illusion of stability was strong right up until the moment it shattered. The problem isn't that change is unpredictable. It's that people choose not to see it. They ignore the subtle signs, the whispers of transformation that always come before the storm. It's easier to believe that things will remain steady, that what worked yesterday will work tomorrow. But comfort is deceptive. It lulls people into a false sense of security, making them resistant to new information, blind to new risks, and slow to adapt when change finally arrives. Look at the businesses that once dominated their industries, companies that seemed invincible until they were suddenly irrelevant. Blockbuster was the king of movie rentals until it wasn't. Kodak built an empire on film photography only to watch it vanish in the digital age. Taxi services thrived for decades before rideshare apps like Uber and Lyft completely transformed transportation. Each of these industries had warning signs. Each of these companies had opportunities to evolve, but they fell victim to the illusion of stability, believing that because things had always been a certain way, they always would be. The same pattern plays out in financial markets. Every economic bubble in history has been fueled by the belief that this time is different, that the highs will keep climbing, and that the old rules no longer apply. Investors, businesses, and everyday people get caught up in the excitement, convinced that the stability they see will last forever. But history teaches a different lesson. Just when confidence is at its peak, the cracks begin to show. And by the time most people recognize what's happening, it's too late. But the illusion of stability isn't just about businesses and economies. It affects every aspect of life. Relationships, careers, personal goals, all of them can feel secure until one day they aren't. People assume that their jobs are safe, that their skills will always be in demand, that the way they live today will be possible tomorrow. They put off learning new things, adapting to new realities, or preparing for the unexpected simply because everything feels fine. Yet the only real constant in life is change. And those who fail to recognize it are always the ones caught off guard when it arrives. Awareness is one of the most powerful advantages a person can have, yet it is something most people overlook. The ability to see beyond the surface, to recognize patterns before they fully unfold, is what separates those who succeed from those who struggle. While the majority move through life reacting to events as they happen, a select few see the signs long before the rest. These individuals are not necessarily smarter or luckier. They are simply more aware. They understand that major shifts don't happen overnight. They build up slowly, quietly, revealing themselves to those who pay attention. Most people live in a state of passive observation. They consume information but rarely analyze it. They hear the news, scroll through social media, listen to conversations, yet fail to connect the dots. They assume that significant changes will come with obvious warnings announced in bold headlines or official statements. But in reality, the most important shifts begin as whispers. They emerge in small trends, in subtle shifts in behavior, in unnoticed developments that seem insignificant at first. Those who are aware recognize these early signals for what they are, the first tremors of an impending earthquake. Consider how technological revolutions have shaped the world. When the internet first emerged, most people dismissed it as a passing trend. Businesses didn't adapt quickly, and many individuals ignored its potential. But a handful of visionaries saw the shift coming. They understood that this wasn't just another technological advancement. It was a fundamental change in how the world would operate. While others hesitated, they positioned themselves to take advantage of the future. The same happened with cryptocurrency, artificial intelligence, and countless other innovations. Those who saw the patterns early had the chance to act, while those who ignored them found themselves left behind. The financial world operates in much the same way. Those who are aware do not blindly follow the crowd. They study economic cycles, observe global trends, and recognize when something doesn't add up. While the majority are caught off guard by market crashes, recessions, and economic downturns, those who pay attention are already prepared. They understand that history moves in cycles, and the same patterns repeat themselves in different forms. The warning signs are always there, but only those who have trained themselves to see them can act in time. Awareness isn't just about recognizing opportunities. It's also about avoiding dangers. Too often, people ignore the signs that something in their life is about to change for the worse. They don't notice when a company starts to decline, when a job is at risk, when a relationship is slowly deteriorating. They brush off small problems, assuming they will resolve themselves, until one day they are faced with a crisis they never saw coming. But those who are aware are different. They don't wait for problems to explode. They recognize them early and take action before it's too late. This ability to see beyond the immediate, to think critically and question assumptions, is what gives certain individuals an edge. They understand that the world does not change suddenly. It changes gradually in ways that are often invisible to those who aren't paying attention. They know that the biggest opportunities come to those who can anticipate shifts before they are obvious. And they recognize that success is not about reacting to the present. It's about preparing for the future before it arrives. Uncertainty is something most people fear. It makes them uncomfortable, anxious, and hesitant to take action. When the world seems unpredictable, the natural instinct is to hold back, to wait for things to settle before making a move. But history has shown that the greatest opportunities arise during times of chaos. When everyone else is panicking, those who remain calm and calculated have the chance to seize opportunities that others overlook. Every major shift, whether in business, finance, or society, creates a moment where fear dominates. People sell their assets at a loss, abandon promising ideas, and cling to whatever sense of security they can find. The majority operate on emotion, making decisions based on panic rather than logic. But a small group sees through the noise. They understand that while uncertainty can bring risk, it also creates openings that would never exist in stable times. The greatest fortunes in history have been built in moments when others saw only disaster. Look at the aftermath of financial crashes. While most people scrambled to recover, the few who have prepared recognize that these moments present the best time to invest. When markets are down, assets are undervalued, and industries are struggling, Those with foresight see opportunities where others see losses. They understand that downturns are temporary and that those who buy in when fear is highest often reap the greatest rewards when stability returns. The same applies to business. Many of today's most successful companies were founded during recessions when others were too afraid to take risks. Instead of waiting for a safe time to start, these entrepreneurs recognized that uncertainty created a rare opening, less competition, lower costs, and a chance to innovate while others hesitated. But it's not just financial opportunities that emerge in times of chaos. Major shifts in industries, technology, and social structures open doors for those who are paying attention. When the world changes, old systems break down and new ones take their place. Those who are willing to adapt, to embrace the unknown and move forward while others freeze, position themselves at the forefront of the new era. They don't wait for things to go back to the way they were. They anticipate what's coming next and act accordingly. The key is understanding that uncertainty is not the enemy. It is the birthplace of transformation. It forces evolution, rewards those who are prepared, and reshapes the world in ways that no one can fully predict. While most people resist change, trying desperately to hold on to the past, those who see the bigger picture recognize that chaos is not just a storm to endure, it is an opportunity to rise. Complacency is one of the most dangerous traps a person can fall into. It disguises itself as comfort, as security, as a well-earned moment of ease. It whispers that things will always stay the same, that success today guarantees success tomorrow, that there's no need to prepare for what's ahead. But history has proven that those who get too comfortable, who assume that the world will always work in their favor, are the ones most blindsided when everything changes. People often fail to recognize how quickly circumstances can shift. A thriving business can become obsolete within years. A secure job can disappear overnight. An entire economy can turn upside down before most people even realize what's happening. Yet, despite these patterns, the majority continue to believe that stability is permanent. They convince themselves that what worked yesterday will work tomorrow. They ignore the subtle warning signs that change is on the horizon. And by the time they finally see the reality of their situation, it's already too late. Look at the companies that once dominated their industries but no longer exist. They didn't collapse because the world changed too fast. They collapsed because they refused to change with it. They saw innovation happening around them but dismissed it as a passing trend. They assumed their past success would protect them, that their brand name alone would keep them afloat. But the market does not reward complacency. It rewards those who stay ahead, who continually evolve, who never allow themselves to be lulled into thinking they've made it. And the same applies to individuals. A high-paying job today does not guarantee security tomorrow. Skills that are in demand now may become irrelevant in the near future, yet most people stop learning the moment they feel comfortable. They stop growing the moment they believe they've reached a place of stability. But the world does not stop moving. Technology advances, industries transform, economies shift. Those who remain stagnant will eventually find themselves struggling to catch up. Complacency also affects personal finances. When times are good, people spend freely, assuming the good times will never end. They take on unnecessary debt, fail to save, and ignore the possibility of an economic downturn. But when the unexpected happens, when a recession hits, when inflation rises, when job markets tighten, they suddenly realize they weren't as secure as they thought. And by then, the options they once had are gone. The cost of complacency is not just financial, it's also mental and emotional. When people stop challenging themselves, when they stop pushing beyond their comfort zones, they begin to stagnate. Growth requires discomfort. Success requires adaptation. Those who allow themselves to settle into a state of ease, believing they've done enough, are unknowingly setting themselves up for a rude awakening. The world does not wait for those who stand still. It does not pause for those who assume they have time. It moves forward relentlessly, rewarding those who stay prepared and punishing those who assume that stability is guaranteed. Those who understand this truth don't allow themselves to fall into the trap of complacency. They keep learning, keep evolving, keep positioning themselves for what's next, because they know that the moment they stop, they start falling behind. Most people believe that success comes from predicting the future with perfect accuracy. They think only those who can foresee exactly what's coming will thrive, but in reality, no one can predict the future with certainty. The key isn't to know precisely what will happen. It's to be prepared for multiple possibilities and to take action before it's too late. The world is constantly changing, and waiting for absolute clarity before making a move is the biggest mistake. They hesitate, telling themselves they'll act when the time is right, but by the time they feel confident, the best opportunities have already passed. Those who succeed don't wait for certainty. They position themselves ahead of time, ready to adapt no matter which direction things go. They understand that action, not hesitation, is what separates those who thrive from those who are left behind. Consider those who saw the early signs of technological revolutions. They didn't know exactly how things would play out, but they knew change was coming. Instead of waiting for perfect information, they moved forward, adapting and adjusting along the way. The same is true for investors, entrepreneurs, and anyone who has ever taken advantage of major shifts in the world. They didn't have a crystal ball. They had awareness, preparation, and the courage to take action. Most people avoid action because they fear making mistakes. They want guarantees. They want a clear path with no risk. But in a world that moves this fast, waiting for absolute certainty is the riskiest decision of all. The truth is, those who win are the ones who take calculated risks while everyone else hesitates. They don't wait for the perfect moment because they know it never comes. Instead, they prepare, they position themselves wisely, and when opportunity knocks, they are ready to act. There will always be uncertainty. There will always be unknowns. But those who take action now, who prepare for multiple outcomes, who keep learning, who refuse to wait until it's too late, are the ones who will not only survive but thrive in whatever future unfolds.